Welcome back to Imperial Wealth's Crypto Chronicle podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week. Welcome back, guys. Me and Mitch were just doing a bit of sign language, trying to figure out which episode we're up to. 17, is it?
I think it's 17. I do remember writing out the Chronicle this morning and changing, the introduction from last week's, which was 16th to 17th this week. So
not bad.
Yeah, I think it is. But, you guys can always correct us if we're wrong.
And progressively getting more and more interesting, the market, isn't it?
Yeah, it is. It's, I think week by week, it's kind of evolving at this stage where more people are becoming interested. The news is becoming, more impactful, both bullish and bearish. So it's good.
Yeah. And as we were walking into the studio, I was saying to you, the thing that I find most interesting about the crypto market is obviously when altcoins are doing their thing and you got the rat race on and new things popping up left, right and center, and what are they trying to achieve? And that's definitely what's kind of grabbing our attention now, is seeing altcoins move again. It's very exciting, isn't it?
Yeah, it is, and it's good to see narratives coming to life. I made the joke to you about partnerships and whatnot, but you don't see any of them in 2022, and then you see Chainlink with its CCIP doing this, and Mitch is doing this, and Solana's doing this with JP Morgan, and this is when it all starts. The wheels start turning when all the inflows actually come back in, which we talked about last podcast. It was all-time high last week for inflows into the crypto market, into Sol, ETH and BTC. So that should be, the tell-all for the interest that's coming in.
Yeah, and it's only the beginning. We were saying just before, we've seen a massive intake on inquiries into our service side of the business and the mining, of course. But we're starting. I think we've had at least 15 or 20 new members in the last 2 weeks get onto our trading course alone, and then the amount of people signing back up to the trading academy has been huge too. And I don't blame them. There's a lot of value in there at the moment, a lot you can be doing in the cryptocurrency market and taking advantage of. So, make sure if you are in the position where you're still a bit gun shy, not sure, have I missed the opportunity, or, should I be getting into alts again? We definitely are, and we're posting those onto the Trading Academy. So that's great. But Mitchell, we've got a bit to discuss on the fundamental analysis side. What's been happening?
Well, firstly, before we get into the international news, which is largely what impacts us poor Australian cryptocurrency investors down under, but there is a bit of Australian news we'll start off with now. The ATO late last week, I think I wrote the article on Friday from memory, they've mandated a CGT on a number of DeFi kind of metrics, which included, funnily enough, wrapping and unwrapping crypto tokens regardless of their market value. Obviously, for those that don't know what a wrap token is, it's just a one-to-one peg pretty much to a token, but it's so for interoperability purposes, so you can move it across chains and whatnot, which is somewhat funny because wrapping and unwrapping doesn't, the value.
I'm trying to think of an example in traditional markets. It would be like saying going and giving a $1 coin to the bank.
A loan is kind of, you can almost liken it to a loan somewhat. Yeah, correct. Do you know what I mean? If you're not paying CGT on a loan. But it is strange. I'm still unsure whether the ATO understands what what a wrapped crypto token is. But I guess, in their corner, what makes sense is whenever you transfer one asset for another asset, you pay CGT on. This transaction is you are transferring one asset for another asset, regardless if there's any gain or loss. Maybe it'll be on the what's it called? The fees you're paying or whatnot. I don't really understand.
I think it's a classic blanket solution. Yeah. They don't understand it. They don't know how else they can do it. They need to just have these blanket solutions in place. I had full exclamation mark disappointing.
Yeah, it is disappointing. But the Australian Board of Taxation will review digital asset taxation, including capital gains tax on cryptocurrencies by the end of February next year. So we've often spoke about in the past how Australia lags in innovation and particularly regulating innovation, and this is no different. So let's hope by mid-2024 they've got something in place that makes us investors A, feel safer, and B, more interested. Get it out there that we've regulated the industry now and it's safe to invest in. So
100%, I agree with you.
Yep. And just before we move on to the main heat of the fundamental news, which of course for our listeners revolves around not only ETFs but Binance and CZ, self-managed super funds. That's something we're going to do a dedicated whole podcast to in coming weeks for those keen listeners. But why don't you tell the listeners, a couple of our minor clients, a couple of our bigger clients, they utilize self-managed super funds to get into mining and cryptocurrency, don't they?
Yeah, I mean, it was one of the key points that I found most interesting at the Australian Crypto Convention. We were lucky enough to be placed right next to New Brighton Capital, and their biggest banner on there was, self-managed super funds and helping people get set up, get cryptocurrency portfolio through their self-managed super fund, which personally, and not financial advice, but personally, that makes a lot of sense to me. It's a long-term investment. Exposing yourself to the cryptocurrency market in a long-term sense. That's what super funds are all about. So we had a lot of our clients coming up and saying, I've set up, 1, 2, 3, some of them are 10 miners on their personal account or their company account. You know what? Why aren't I doing it through my self-managed super fund? It's a long-term investment. The one downside of mining is, yes, you do have an ongoing outlay, which can affect cash flow, which is your power bills. Yeah. Once you get to 10 miners, that can be $2,500 a month. But if you're doing it through your self-managed super fund, well, you can pay that expense through the self-managed super fund. So we've been absolutely inundated since the CryptoCon event, and a lot of our clients that only had 1 or 2 miners because that's what they could afford on their personal have now gone through and set up the self-managed super fund, and now they're doing it with more 10 or 20 miners now. So yeah, that was really awesome to see. It made a lot of sense in my mind. Not something I personally had put a lot of focus into. We probably should have thought about that a lot earlier. Yeah. But yeah, really awesome to see clients taking advantage of that now.
Yeah, super awesome. Alrighty, well, let's get into the meaty part of the fundamental news. Just quickly, I won't talk about this too much, but most people should know that officially BlackRock and Fidelity both entered into the competition of officially filing for an Ethereum ETF, or Ether ETF, I should say. We spoke about both of these institutions being the 2 largest institutions pretty much on earth, with assets under management, striving not only to get their Bitcoin spot ETFs approved, but they want to get, an investment vehicle for their institutional clients to be able to invest in Ether, which is fantastic as well for the world of DeFi and, opening it up. I know that we've probably got some Bitcoin only maxis. We've definitely got them in the Discord that all hate ETH and, the ICO era and the centralized of the staking. And, there's all these knocks against ETH. But, I see it as a good thing. And the reason why I see it as a good thing is because Bitcoin and ETH are first, and then if they go extremely well and we get mainstream adoption, then the clients start asking, well, can you please invest my self-managed super fund, or whatever you call it, 401 in America? Can you put a bit in Sol? Can you put a bit in Link? I want some room.
Get the basket of the top 50 going.
Yeah, so maybe Kathy Wood can create, a shitcoin ETF on ARK Invest where it's just got, top 50 alts that you can invest in via an ETF. But yeah, the main gist of this is...
It opens the doors.
It's good to see. We do love ETH at Imperial Wealth. We find it super important to the ecosystem, and it's only good. But moving on to the US Doge, Binance and CZ. For our cryptocurrency listeners, unless you live under a rock with Patrick Starr, you should probably well heard about this. So the Doge revealed that Binance's CEO CZ had pled guilty in criminal and civil cases. So this included a $4.3 billion settlement. Additionally, he also had a $175 million bond, which he paid, and a $50 million fine. So it's about $225 million for our man CZ, and about $4 billion, I guess. I don't know if that was part of the $4.3 billion. I'll probably have to look that up, but let's just call it $4 billion for Binance itself. So essentially the accusation included Binance enabling illegal fund transfers. So this goes back to, them not taking the precautions to understand who's actually using their services and KYCing. So, there's reports that ISIS or Hamas or whoever, anyone throughout the world with an internet connection can connect to Binance and use it, and unfortunately they allowed that to happen. and they probably also falsely claimed they were complying in the US, where there was no regulation, so it's kind of hard to comply with no regulation. But it seems like the only company that did it was Coinbase. They decided to go public. Do you remember? Was it 2 years ago, 3 years ago?
I reckon
just before the last bull run, I think.
A bit more than 2 years, I think.
Yeah, maybe 2019, 2020 or something. But it makes an interesting conversation, this one, because me and you were talking yesterday, and to any listeners from our trading academy or day trading course, I gave you this rant as well. But it's interesting because we know CZ as an international Chinese man who grew up in Canada, and he's always got the infamous 4 sign, and he's pretty much built in the last 4 years a startup company to multi-$100 billion company. Yeah, and what's happened is CZ somewhat had not a monopoly, but had a lot of influence on an industry that America have no influence or control over, the government I'm talking about. So it's pretty easy in hindsight to understand why the US government doesn't like CZ, because he's a Chinese man who makes hundreds of millions of dollars out of the States as well as internationally. He wasn't complying with them. They wanted to make an example. I think they were quite embarrassed after the FTX debacle as well, considering Gary Gensler and his friends were all friends with FBF. They went and had lunch with him many times. They couldn't pick up on any of it. So I think not only that, but going back to the Coinbase point, is that Larry Fink and all these Fidelity, your BlackRocks, all their custody for their spot and Ether, ETFs, is going to be with Coinbase, where all the Bitcoin's going to go through them. They have self-custody of it, blah, 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 blah. So it makes kind of interesting point as to why the US government would want to push so hard to find CZ and get Binance out of the States, when you consider that the government and the SEC is in BlackRock's back pocket. There's a bit going on here, but essentially the way I see it is, this is falling into the hands of BlackRock, who kind of have the SEC, the Doge in their back pocket. They've said, let's get rid of Binance. Let's drive them completely out of the States, which is now done. That's a tick. Now let's get all the competition in with Coinbase. That's a publicly listed company that completely complies with the SEC. And, well, they're being sued by the SEC and countersuing them. But they're a publicly listed company. They comply with everything. And then this falls into the hands of BlackRock, that can now control a lot of the Bitcoin and a lot of what happens, particularly in the centralized exchange game, because, particularly in the States, works really easily for BlackRock, and it puts a bit more of a stranglehold on this for them, I feel, at least. So,
and when you look at it like that, it's the master book play, isn't it? I mean, like, to summarize, there's a bit there, but just to clarify, so Binance, $4.3 billion fine. CZ is gone, is retired.
So he can't have anything to do with them for 3 years, I believe.
Right. What was that last bit?
I think he can't have anything to do with their operations for 3 years.
3 years, okay. Yeah. I wonder how that affects we're going off track, but how that affects BNB.
He said he was asked about this. I saw him in a tweet, and he said, someone said...
there is no need for a CEO.
Yeah, so someone tweeted saying, please, CZ return as the BNB CEO, and he said BNB doesn't need a CEO, because Binance needs a CEO. It's a centralized exchange. BNB is a completely decentralized token protocol.
Correct. And in his Twitter post, he highlighted that one of the things that he's looking forward to now, taking a step back from Binance, is really getting involved in the DeFi space. So I wonder whether that energy we put towards BNB as a token, or just...
I think a lot, because I often see him commenting a lot on new projects that have launched on the Binance Launchpad, and ones he thinks are really cool. Like, he makes comments on his own ones that, he thinks... good for the industry and whatnot. So I think, he did make the comment he's never going to do another startup. He's probably done with that. But yeah, it'll be cool to kind of track him. I hope we can get a CZ wallet tracker. See where he starts trickling into what shitcoins he's investing in. But
it'd be an easy one to follow, wouldn't it? But yeah, I do wonder where his allegiance will lie. Will it stay on the Binance chain, and that's where he'll focus on a lot? And probably he's still got heaps of vested interest in it. He's still a shareholder and whatnot. So
So I think that's, people say like, he's done. No, he's still a majority shareholder of Binance.
Exactly. So makes sense for him to focus that there. But Yes, that's probably the biggest news at the moment.
We thank you for your service, CZ, by the way.
And we just put 4 fingers up.
Yeah, 4 fingers. I mean, you probably stuffed up a few things and made a few bad choices, but people ask me at the convention about him, random people, ask me about buying, and I've always said the same thing. I said, he's done definitely some things wrong, but I think he should be punished for. But I never thought he had a sour taste in his mouth. He always wanted the best for the industry.
Correct.
In his own way.
Yes.
Whether that was doing it unregulated, doing what.
He saved us many times.
Yeah. Saved us many times. You look what he did with the $1 billion fund this year. You look at, he's done a ton of things. And I think the main sticking point of what we spoke about before is don't view this as a FTX, SBF debacle. He never touched your funds.
Correct.
Whereas SBF was leverage trading with my USDT. And
that is the biggest distinction of why we probably haven't seen the market dump.
Yeah.
Is they did SEC clarified as well. Is that right?
Yeah. So, I think, there's always a sell-off kind of, it's predictable in the cryptocurrency market. In hindsight, it always is. But, yesterday we obviously sold off. I think we're at mid 37K, sold off to 35.5K. So a decent dump. But, we've spoken about this before on the podcast, and it's talking about news and how it impacts. And I sent this into the Trading Academy yesterday, and I said, and I spoke about it when they first got sued at the start of the year as well. And, it barely impacted price. And I said, if this happened 6 to 12 months ago, if Binance in November of 22, when FTX went down, we were sitting at 17, 18K, CZ had to resign, Binance got fined $4 billion, but, the crash would have been a lot worse. So and it's almost, it gives you that inkling of a bull market, doesn't it? Because it's when news doesn't affect price too much, you get that good feeling.
Of what we used to talk about, like that good news would come out and it wouldn't even push price up.
Yeah, exactly.
It's like bad news comes out now and it's like doesn't even push price down.
Yeah.
There's just so much interest for other reasons that if bad news does cause big crashes down, it just gets gobbled up, doesn't it?
Yeah.
You got to be quick.
Yeah. So we might as well quickly continue with the technical analysis. There was one more article on Bitcoin fees surging as excitement builds around spot ETF, but we'll discuss that in the mining section. There's not a heap to report technical analysis wise. Last week when we recorded the podcast on Thursday, we're about at 36,500 after retesting those highs and failing, and it's kind of re-happened this morning. Obviously, to backtrack, we were at 37K, dumped to 35K after Binance CZ overnight this morning, rebounded all the way back up to 38K or 37,900, 37,800, failed to break those highs again. We're sitting at about 37,300, I would say. I don't have my computer or phone, but
sounds accurate as of the past 2 hours.
Yeah, so essentially we dumped pretty much. We've got a pretty nice trend line where if you read the Chronicle, you'll see it that we're holding. We dumped to a local golden pocket. We bounced. But just off the back of last week, I'm still really positive. It's a message I've been sending to my traders and investors, remain positive. Any dip you'll see will get eaten, and it has been. It's been eaten with huge amounts of demand. If you go and look at the chart, you often hear people in a bull market, saying, it's a dip eating season only, it's up only season. It feels like that at the moment because, I'm not going to reference alts right now, but, Bitcoin every time it's gone up, it's had a little pullback and, there's been no major pullback in these impulsive moves upwards. So, it makes an interesting read whether we get one eventually or it doesn't come.
And probably the talking point there is the, the emotional side of the trading.
Yeah.
And I think we spoke about this recently, and I was saying, even though a lot of our buying has already been done when the market was down at its lows, and we released that all through the Trading Academy, obviously we're still buying now with new funds, salary or whatever it is that we get our hands on. Strongly believe in the Bitcoin market, and it is one of those things for me. My strategy at the moment is even those projects that I DC'd in way long ago, if I see crashes in the market, without being too emotional about it, I'm just buying a little bit on those dips now. All those, probably 10 or 15 projects in the Trading Academy, if they dump, I just kind of pick up a bit more. Yeah.
And, easy example, it's Fetch AI. I'm happy to say it on the podcast, but I used this as an example of Trading Academy members recently. If you go look at the chart of FET, you'll see at the start of the year it went from, let's just call it 15 cents, and it ran all the way to 65 cents. Trading Academy invested in FET at the start of the year, just one buy at 38 cents. We saw it go all the way up to 60, 70. Then all from that top of, this is when AI narrative first came out at the start of the year, and it just bled hold on. So on the way down, I bought it again at 25 cents. I then bought it again a month ago at 18 cents, and it dipped to 16, 15 cents bounce, and then bought third DCA or third purchase. And buying at 38 and then down to 27 and then 18, it gives it, 25, 18, it gave an average buy of 27 cents. A month ago, it was 15 cents. It's now 55 cents. And that's a month ago I DCA'd into it. And then, probably 2 months before that when it was at 25 cents or whatever. Not emotional about it, understanding I watched it, bought it, watched it go up, watched it come all the way down. If it's in a season like this and, something is a little down from where you initially thought it would be, it's a great opportunity to dollar cost average. And, I tell new people joining the trading academy, just look at what's, relatively similar, get your first entry. If it goes down, view it as a great opportunity. Don't view it as, fuck my...
Exactly. And that word that you just said, the first entry.
Yeah.
It's like, if you're talking to people who have never got in the market, the first thing they'll say, is it a good time to buy right now? Yeah. And you're kind of like, well, if you haven't got any, then not financial advice, but of course, you need to get an entry into the market, get your first entry in, and then if it dumps down, then you can DCA more. And then once it comes back up, if you want to, go into it more and compound, then do that. And
it mitigates having to time the market completely. So I've, across the span of 10 months, I've made 3 different purchases on FET without thinking about any timing. Got an average buy of 27 cents across the year, and it's double that right now. And 1 month ago, if I just held my 38 cents trade, a month ago it would have been down, 50%. Within, gold cost averaging, and a month later it's up 100%. It's the only industry in which you can be down, 50% of your capital a month ago and then be up 100% a month later. I had a friend come over last week who's kind of saying the same thing, and I just said, please don't put all of it in. Just get your first initial entries here, because, last week we were I think he asked me, came over on the Wednesday or the Tuesday, we're at 38K, and, I said, we're a bit of resistance now. Woke up the next morning, market had dumped, and, he texted me saying, oh shit, I bought a little more, and, what do you know, we're back up.
Exactly.
And FET was one of those ones that he bought. I said, we've got it from 27 cents, but, it's at 40 now, but just get your first entry in, because if it goes up, you're happy. If it comes down, put some more in dollar cost average, and he's up a fair bit on it, 20-25%. So
exactly that. So a shameless plug again to the Trading Academy. Obviously on this notion, if you're listening in and you're kind of going, this makes so much sense, why aren't I implementing these strategies? First of all, you need to surround yourself with experts. You need to surround yourself with community, and we offer that through the Trading Academy. And we also have notifications on our buys and sells. With our Black Friday sale, we've got it for the Trading Academy is 60% off. So right now is probably the best time to lock that in. We have a year subscription. You can lock that in for the full year for only $997. Usually it's $2,500 for the whole year. And that'll carry you through from now all the way into the bull market. You can get in on these positions that we're getting in now. And then, you're not paying monthly fee or anything like that. So get in touch, go onto the Imperial Wealth website, go to the crypto section, the Trading Academy. You can sign up straight away or book in a call, and we can talk through whether it be a course that you start with. Our courses are on 50% off for the Black Friday sale. And then finally, we're also doing 15 to 20% off on miners, the S19K model. So take advantage of that Black Friday sale. The main thing we're talking about, Mitch, right now is, this is still early days. We've got a lot ahead of us. Don't look back in kind of 2, 3, 4 months time and go, I could have got in way lower. So that's good. That's good for the fundamental and the technical side. We'll finish up on a bit of mining, Mitch. Is that right?
Yeah. So quickly before I'll let you do the speaking on the mining, but recently I spoke about the ATH of Bitcoin revenue for 2023 last week. Following that, given that we've got the spot Bitcoin ETF, amplifying demand as well as the incoming halving, the supply cut, fees last week I think surged by 113% from the previous day and almost 800% from a year prior. So we're talking deep bear market November last year, when Bitcoin was $15,500. Fees are up 800% since then. So pretty much, Bitcoin's climbed to 37,000. It's broken, in most people's mind, out of a bear market range. As I said, we've got the halving, spot ETF, it makes a lot of sense, right? The Bitcoin fees are surging.
And it's my favorite one when Bitcoin fees surge because, and I've said this a couple of times, but every calculator online, if you go Bitcoin mining calculator, the only revenue that it considers is the 6.25 Bitcoin that you get from the block reward. But right now, the Bitcoin fees that you're saying, which has surged so much, is accounting for between 1 and 2 extra Bitcoin per block. That's an extra 30% of revenue that these calculators are not even considering. That's a big deal. In the long term, that adds up substantially. So
for sure, and you can only probably assume, given whilst it's probably expected that fees at some point will retrace a little bit, but as I said, we've got spot ETF demand coming, more people using the network. Rewards will be slashed at the halving, but you've got ordinals, you've got NFTs, you've got so much emerging on the Bitcoin network right now, which is pretty crazy to see, that can drive these fees higher.
And who knows? It could be interesting, the transaction fees. I think this bull market, there's a way bigger market involved.
Particularly when you think about the NFTs, the ordinals and stuff that's already built there. When ordinals got released, the fees went crazy, and that was in start of this year, still in a very deep bear market. So it'd be very interesting to see what happens. On the downside, I suppose, it's not always sunshine and rainbows, but there is a much higher hash rate at the moment. So we've gone to 550 exahashes. Which is pretty much all-time highs. We're going to see a difficulty rise of about 3%. Was that? I can't see it there now, but difficulty?
3% difficulty rise is expected in 3 or so days' time. But as we say, the Bitcoin's price going up usually counters that pretty well. And all saying that the S19Ks are looking quite profitable still. So that's very good. Other networks, we've got Dodge and LTC has had a 30% drop in difficulty, which is massive for our clients mining on L7 models. That's really good. CAS had a 8% rise in difficulty, but the massive price spike in CAS has well and truly compensated that. What are we seeing CAS go from, since our last podcast, maybe 9 cents to...
Yeah, it might have been 9-10 cents to as high as 14 or 15, but... I'm hoping we get pulled back to 10, but I don't think it's ever coming, if I'm honest.
We're waiting for that to increase our bags, but that's all right. We're really good for the CAS miners, and yes, there's been a massive, similar to what I was saying with people expanding on their self-managed super funds. That's been one that I honestly didn't expect to have so many of these CAS miners being purchased, but we've got a lot of clients just...
I think a lot of people just have faith in what this utility this blockchain is. So
100%, I'd love just to see it keep going. I've said it many times. It's so good for the mining ecosystem, but it's a really good one. And that's pretty much it. We've got Dash has continued to drop in difficulty, higher returns on Dash mining, and Kadena has been pretty stable with only a 0.7 rise in difficulty. So that's a bit of an update on the Bitcoin mining and the altcoins. Yeah,
that'll be it. I think, heading into next week, as I've said to everyone, remain positive. What I will say, just the last thing on technicals, is just be a bit careful of alts for the time being. I feel like I say this most weeks, but, last week, I think when we were on the podcast, Link was $16, Sol was $65. Link's 14 right now. So, but we're at a higher Bitcoin price. So once again, be watching, FBTC particularly bottomed again today. I think it came back down after the dump, and now it's, so always keep an eye on Bitcoin dominance, FBTC. If you don't understand these charts, we teach them in the courses, and, Trading Academy get updates on them daily. I will say 38K remains our major resistance. If we can break it, probably see 40 to the downside. Keep your eye out for 34,000 and 32,400, and good luck.
Do we want to have a little bit of a game and Bitcoin price prediction for next week's podcast?
Okay, what's the date? It'll be the 30th. And there's only 30 days in November?
Yeah, I believe so, yeah.
Oh, what's that bloody song again? I don't know. 30 days.
September something and November.
Yeah, I think the and November's at the end.
It is 30 days. It's 30 days.
So that'll be the monthly, or it'll be the day before the monthly close, which is interesting. Bitcoin's price. It's... Fuck, I hate going out on a limb here, don't I? I'm going to say...
I can see.
Is it next Tuesday or next Thursday?
30th.
Yeah.
The podcast, when are we doing it?
Yeah.
We'll do it next Tuesday. So it'll be 28th. Yeah. 4 days in the US before the...
Yeah. I'm going to say it's pretty similar, actually. I'm going to... Yeah,
I think we're just going to hover between.
Yeah, well, because my kind of reasoning was, you know, we failed the highs once, failed it twice, and I just thought if we're pretty, you know, if supply is just being distributed every time we go there, I think this will be our top for 2023. And then early January is when we fire. Do you remember early January this year? Like, you know, everyone had the Christmas season. You've been around long enough in crypto. People sell off a lot of their holdings come December. So my thought was, you know, if I can't break in November, most likely December, we see a bit of a cool off. You know, we might range even between, let's say, 30,000 and 38,000 whilst people are on holidays, get bored a bit. And then January, spot ETFs are back in action. You know,
April
everyone's
halving.
back interested, April halving. So I think that's the most likely scenario is we range for the rest of 2023. There's only a month left of 2023, remember. It's not that long. It's 4 weeks. So I feel like we could range given Christmas season. Santa Claus is coming. Might need to sell a bit of our room to pay for some Christmas presents. So, yeah, I think next week will be it. I'll say 37,200.
So $100 less than now.
Yeah.
And just, even though we are wrapping up, interesting point there. So what do we think before the halving? Do we think we push over the 40K? Do we get all higher than the all-time high before halving?
Didn't realise we're doing a 4-hour podcast. I could be here all day explaining it. But my idea was, if there was any form of a blow off top, which I was talking to Armpit about today from CoinStash, who he thinks we're making he's certain, that we're making before halving. But you know what?
It's possible.
I'm gonna say it. Before halving. I think if the ETF comes in January,
it's so possible. It could go high. Like there's so much waiting.
Well, it's always been an interesting talking point for me across this last year is there going to be another cycle? And by another cycle, I know there's going to be another cycle, but I meant cyclical cycle of 4 years, because I feel like the ETF and the macro, because remember, completely even macro playing field the last 3-4 cycles. This one, 3 cycles. This one, it isn't. It's completely different. We've got 5.5% interest rates, which are getting cut to 0 at some point. You know, they were at 0 for the whole time previously for Bitcoin mainly, even negative some of them. But yeah, it makes a very interesting scenario, because it's like spot ETF in January, let's say March rate cuts, let's say April halving. So lot to take in, and you know what, you probably send yourself crazy trying to find out. So
we never really like doing this, but it's just good for a little chin wag. But
yeah. I'll say before the halving.
All right,
jot it down.
All right, I'll sell my house now.
Not financial advice.
Thank you very much, everyone, for joining in, and we'll be back next Tuesday on the 28th.
Cheers. Thank you.